Hey everyone, welcome in to another daily editorial here on the KE Report. Korelin Chad here chatting with Matt Battiali, the editor of the New Energy Letter, which is published under the Mangrove Investor. I will post a link to the Mangrove Investor website below. Now, what we're going to be focusing on here is DLE, which is Direct Lithium Extraction. It's a technique and a technology that a number of companies in the lithium space are trying to advance to show that, first and foremost, this technology and process can effectively produce or capture lithium out of brine deposits. And then on the back of that, show that it can happen at scale. I've already talked to a number of, let's call them more smaller lithium companies that are working on pilot plants, trying to show the effectiveness of their own DLE technology. But more recently, we've saw a major energy company, ExxonMobil, make more of a shift towards the lithium space. The company is acquiring prospective lithium land, as well as developing their own DLE technology. Matt, having ExxonMobil and the capital, the funds that company has behind it, with a now seemingly focus in lithium, how important could this be for the old lithium sector here?
I think this is huge. I think this is a magnitude 7 earthquake in the lithium space. Yeah, ExxonMobil is a mega corporation. I think it's probably larger than the aggregated market cap of all the other lithium miners out there right now. They're doing a couple things that are interesting. This is not greenfields. These guys are going into an area that has been historically drilled for oil, into it's called the Smackover Formation. It was a place where oil was discovered in the 20s, so we have lots and lots of information. We know the brine. It's been studied. There are other lithium folks in there, but they're saying that they can use DLE, and DLE is the holy grail of kind of extracting lithium refinery, actually, is probably the right way to put it. It's the ability to take the lithium metal out of brine. It's faster than ponds, which is obviously going to improve its economics. It's more efficient. It gets more of the lithium out than the traditional brine ponds do. And in general, it's going to have a greener footprint than the hard rock because it's just wells. So you have a much smaller disturbance and you don't have any waste like you do in the big brine ponds. So ExxonMobil to me is a major de-risker for DLE, which, as you said before, DLE has been the holy grail. Lots of juniors have been chasing it for a long time. But to see a company the size and sophistication of an ExxonMobil come into the space, I think we know a couple things. I think number one, like I said, that they must know that their engineers have cracked DLE, that it's economic. And I think this signifies a pretty significant source of income for Exxon. I don't think these guys are going to do this for a $5 million a year revenue stream. I think they see lithium as a major revenue source, and that the implications of that for electrification are huge. I mean, that just basically strengthens my resolve that the whole electrification sector is about to see a pretty big influx in new capital.
Yeah, Matt, it really is kind of eye-popping to think about the size and the scale of a company like Exxon getting behind DLE in a big way, because there has been the holy grail for the last, let's say, decade to try to get DLE off the ground. And a lot of junior companies get it to the point where they get to a demonstration plant or a pilot plant, but they never really have the funds to build something. Exxon does. They never really have the wherewithal to follow through or the staff to make it happen. Exxon's got that. So this could be a real game changer in the space. And just the size of Exxon, they plan on being able to provide enough lithium on their website for 1 million electric vehicles per year by 2030. That's not that far away. You know, that is just a handful of years away. And then they're producing a massive amount of lithium. So my question to you is, what does this do to the lithium sector if DLE, if Exxon does crack the code in a big way, and let's say a handful of other juniors are in there as junior producers? What does that do to hard rock lithium companies? What does that do to traditional brine companies in the lithium triangle? Are they out of business at this kind of a juncture if direct lithium extraction comes on in a big way?
Well, I think it's all going to come down to economics, right? We've seen this across the spectrum in commodities forever. Anytime the commodity price falls, you have those companies that are on the cusp whether they can make their projects work or not. And so if ExxonMobil can pull off DLE and supply the market at a substantially lower cost per ton than what we have now, there are going to be a few companies that will absolutely be competitive. SQM, Sociedad Química Minera, they're going to be competitive. They can produce lithium at a relatively low cost. But yeah, I would definitely, if I'm an investor and I'm holding a whole suite of junior lithium companies, it's time to ask some really pointed questions about these groups. Because yeah, if ExxonMobil can come on, and they're saying that they're going to have first production by 2027, so you effectively have 3 years before these guys start producing lithium, and then we'll have maybe 6 months before we have a good sight of what their economics are going to be, because they'll be telling us in their reports. This is a time to really pare down your investments in junior lithium companies. If you have groups that are super low cost, I would certainly be looking at them. But I want stuff that's in the third or fourth quartile of cost to compete with Exxon. If you're looking at stuff that's pretty high, it's going to be pretty expensive or high cost, I'd be looking to divest.
Just seems like DLE here could truly change this sector, because the current process of producing lithium is they are stored in evaporation ponds, and then these ponds the water slowly evaporates. This can take a long period of time, and quite frankly, it only yields about 40 to 60% of the lithium in the brine. DLE, and again, this hasn't all been proven on a large scale, has the potential to yield 80 to 90% recoveries, and also at a way faster stage. We keep hearing that lithium isn't rare in the world, so it seems like a technology that pulls it out of the ground quicker and cheaper could actually push down the price of lithium. How does that carry over to the rest of the market, like the battery market or the car manufacturers?
Yeah, I think that to me is the exciting part of this story. Right? We see ExxonMobil coming in. The implication is that these guys can produce lithium at a substantial discount to, like you said, evaporation ponds and hard rock. That implies that the price of lithium is going to come down. We're going to have more of it around because these things are more efficient at producing lithium and cheaper. So the price will come down because it can come down. The cost of the batteries for these EVs is half the price of the car. So if we can reduce the cost of the battery, we can reduce the cost of making these EVs. Therefore, they'll be more accessible. So you'll have people who wanted an EV, but they looked at the price tag and just couldn't really justify the 20 or 25% markup over a conventional vehicle. Maybe they'll pull the trigger now. And so if you have more demand for electric vehicles, which, when you lower the cost, you're going to see that, then you're going to need more lithium and more of all the associated metals as well. So in my mind, the reduction in the price of lithium will accelerate global electrification. And so we'll be much more likely to be on those higher uptake forecasts that you see the analysts put out on EV penetration. And that has really good implications for the copper industry, for the nickel industry, for the graphite industry. So there's a lot of associated benefits for this that really could spur a pretty significant bull market across the space, which is exciting.
Well, and Matt, another thing that comes to mind is all we've heard for the last couple of years is that lithium is going to be replaced. It's going to be substituted out because it's becoming too expensive. And if you look at the run it went on in 2021 and 2022, you could start seeing the rationale behind that because lithium prices were spiking. They have since now rolled over in a big way. They're down pretty big this year. But if this direct lithium extraction really works at scale with companies like Exxon, and other companies would probably jump on the bandwagon too, then it would seem to take away the substitution risk that we're seeing in the battery tech. What do you make of that?
I agree 100%. It's easy to substitute, or it's easier to fund experiments in substitution when the principal commodity that you want to substitute for is really expensive. But if you cut the price and this stuff is really useful and we already understand how it works in batteries, the impetus to substitute goes away, or at least it's massively reduced. And so, yeah, I mean, cheaper lithium could mean that the lithium ion battery remains the pinnacle battery in electrification for a much longer period.
So, Matt, when we do talk about lithium companies, though, we have talked about a lot about the smaller lithium companies. And you said, well, it really seems like they need some of the best formations out there. They need some of the lowest cost of production out there. Quite frankly, though, is there even room for these smaller lithium companies if we do see a shift in some of these large oil companies moving into the lithium sector when there is a DLE technology proved out?
Well, there may not be. I mean, Goldman Sachs wrote a report about DLE, and they basically compared it to the jump from conventional oil fields to shale. And what we saw in the oil industry when we were able to crack shale was a lot of the conventional oil companies went away because it was just more expensive and the production decline was there. And so you drove the price of oil down so far that a lot of these conventional oil companies went out of business or got acquired. And it basically took Saudi Arabia intervening in the oil market to actually push the price low enough to push out the mass of shale producers. So you could definitely see catastrophe coming for these juniors if you get to a point where it does become that easy. And the other part of it is there has to be capital behind it. I mean, you guys made a great point earlier. There are a lot of juniors that looked really interesting and were prospective, but they were starved for capital. These major oil companies aren't starved for capital. So, and like I said, a company like ExxonMobil isn't going to get into this business. And they've created an entire division called Mobil Lithium to do this. There, I guarantee you, were some pretty extensive economic models created to look at this, and it clearly supports that. So, I think it was Shad earlier said that the other oil companies might jump in here too. I guarantee you that they will. The companies that have access to oil field brines and see the success or failure that Exxon has, if Exxon succeeds, bet your bottom dollar. Chevron will be doing it. BP will be doing it, particularly because it's also greenwashing for them, right? These are oil companies that can then go out and thump their chest and say, we're producing lithium cleaner than the other guy, faster than the other guy, more efficient than the other guy. That absolutely will go a long way toward helping them in their ESG side.
Matt, I think that's such an important point, and people discount ESG, but it's very important for these companies as far as their corporate-facing documents and public-facing documents to show that they are doing it. Some people claim it is just greenwashing, but if you think back to it, BP did a big campaign about a dozen years ago in the solar space, and they got serious about it. All of their gas stations had solar panels on the roofs, and they had a whole division doing solar farms. We saw the same thing with Duke Energy and wind farms. This could be the next wave of ESG energy. Plus, it is profitable, and these companies want to make money. So just from a big picture standpoint, you have a lot of experience in the oil patch. You have a lot of experience in your formative years looking at these companies to work at, but also as an investor in the sector. How common is it to have these brine fields with lithium in it? Is it something that's very common in the oil space?
It is, yeah. I mean, that's one of the interesting things is it's just not. Lithium is not rare, and these lithium salts, when you think of brine, you think of salt water, and salt water isn't just sodium chloride, which is what we think of, right? That's table salt. It's also, fertilizer. It's also the stuff you make drywall out of. And so, yeah, lithium wasn't useful in the past because, you make grease, you made paint out of it, but really it wasn't all that useful, but it's around. And so if suddenly it becomes useful and there's a market for it, yeah, I think this is going to explode. So
is this now really just a focus on the majors and what sort of technology they develop, especially when you consider just how short of a timeline ExxonMobil has put for itself again, in 2030, being able to provide that much lithium to support 1 million EVs made per year?
Yeah, I'm probably going to sit on my hands for a while on lithium. Here's the problem with it. As we talk about this, we expect the lithium price to fall. And if the lithium price falls, investors are going to sell lithium companies. And we know that that the market's not rational. And so as with every sell-off when the commodity price falls, babies are thrown out with bathwater all over the sector. So if we do get this washout, which I kind of expect we're going to get a washout, if Exxon is successful, the clock is on the field for high lithium prices, there will be an opportunity to pick up good lithium projects that are economic at a much lower price. And the other thing about this is I guarantee you that Exxon will be digging deep into this direct lithium extraction process. They'll be funding research. So that technology will go rapidly. We're going to see a pretty quick learning curve on how this all works. And so it may be that you're going to get a washout, lithium prices decline, and then you see some of these DLE juniors that can produce economically that we can buy as investors at much, much lower prices. And these guys will still be in that bottom one or two, first or second quartile of cost.
Well, Matt, I just want to circle back around to something you mentioned earlier. I think it was a fantastic point for people listening to this that maybe are not that into lithium, but they like the idea of critical minerals. If you have a better adoption rate for electric vehicles because the price of the battery comes down, therefore the price of the car comes down, more adoption means we're going to need a lot more charging stations. And if we're going to need a lot more charging stations, we're going to need a lot more copper. So maybe just speak again to how this accents the copper side of things.
Yeah, I mean, there's no substitute for copper in charging stations. I mean, you can use aluminum to move electricity, but you can't use it in the motors. So you're going to need more copper. The more vehicles you make, the more copper you're going to need. Nickel is another one that there's no substitute or there's a few substitutions for nickel in batteries, but we're going to need a lot more of that. Cobalt is the sort of thing we're going to need a lot more of. So there will be opportunities in these other metal plays. But yeah, I'm most bullish on copper. I've been banging that copper drum for a long time because copper is the energy metal. It's the thing that moves the electrons from point A to point B. And if you are going to trade gasoline for electricity, right? We're out with the gas engines and in with electric motors, you need a lot of copper, significantly more copper. So we've all seen these forecasts, and I talk to people about this, and they're like, they've been talking about increasing copper demand for years, and they've been wrong for years. And this might be the tipping point. This might be the reason or one of the reasons that we really see the copper demand jump. On the flip side, and this is a topic of conversation for another day, but Cobre Panama, the giant copper mine that can produce, like, depending on the estimate, I've seen as much as 1.5% to 5% of global demand for copper. It's offline. It's shut down. So at a time when we're standing on the cliff of extra demand, of increasing demand for copper, instead of increasing supply, we're seeing major copper mines get shut down due to politics. So yeah, that's the reason I'm bullish, mostly about copper, but really about all of the electric metals.
All right. Well, Matt, we'll wrap it up here. This is an ongoing development for the lithium space, and I think it was just a matter of time before some of these major oil companies even publicly said that they were looking at this sector, but now having a company as big as ExxonMobil can, in a way, change this whole market. As we've talked about, now it really just seems to be an arms race to who can develop a DLE process and technology that works at a large scale to take advantage of all the lithium that seems to be around the world. So, hey, Matt, we'll follow up as this continues to develop. We'll also continue chatting critical minerals with you. It's great having you back on the show. Thank you very much for your time. We'll chat again in another couple weeks.
Thanks, guys.